Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again this week, where we take a deep dive into everything that's going on in the markets last week, the week coming up, and talk about key topics. Today, we're going to be talking about the fun topic of tax. Believe it or not, we are heading into tax season 2021. I know, mid-February already. I can't believe we've come this far. So we're going to talk a little bit about things we need to take into consideration, changes that happened in 2020, and things that you might want to be able to take advantage of on your taxes for this year, or for last year, I guess, and coming year as well. So we'll get into that. Before we do that, as always, remember everything we talk about here is for educational purposes only. We try to keep everything as accurate as possible, but things are constantly changing, and always do your own due diligence or seek the advice of a professional before applying any strategies to your portfolios or your financial plan. With that, if you're watching us live here, you can ask questions. Just click on that Q&A button. If you're listening to us on the podcast or watching the replay afterwards, go to mikeonmoney.com. You can send us in your questions or give us a call. Always happy to answer anyone's questions and help out any way we can to see how some of these things might fit into your portfolio. So with that, let's jump into what's going on out there. We're still looking for some numbers out of the U.S. on the small business optimism for January. We were hoping to have those last week, actually, but we have not got them. Actually starting to see a little bit of pessimism coming through on that front as people are a little bit more concerned about the shape of the economy, and we'll discuss that in a bit more details. We're also looking at the job opening and labor turnover for December and the agricultural supply demand estimates. Stock futures on Tuesday rose a bit. They've steadily been notching to record highs, but very small increments. The S&P was up 0.5% and down 0.7%. Both benchmarks kind of hitting all-time highs before we went into the long weekend and President's Day, and NASDAQ moving just 0.4%. Google partners are bracing for a big hit potentially, as Google is looking at, or threatening, I should say, to exit Australia. This is over a proposed content licensing law that would ripple across the industry, satellite partners like Apple, with revenue gaps where they use Google's analytics, and several other of the big advertisers in the country. So we'll keep an eye on that. Of course, on the tech front, there's been a lot of fighting going around globally when it comes to antitrust, licensing, and kind of partner data sharing. In fact, Apple has one going on in the US, which we talked about last week. Moderna has shored up its supplies for its COVID-19 vaccine ingredients. So we've seen that around the world, and here in Canada, where the supply chain there was interrupted. Looks like they've got that a bit under control. Hopefully, we'll see. Then the numbers pick up. I know BC, we have a slide in here to talk about it. BC, we are hopefully going to get back on track with the rollout plan. Global fuel prices jumped in Asia and the US as we revved up demand. When we talk more about the oil prices, we did break through $60 briefly, holding just below 60, around 59.5, which is a big move from last year. Not so much on demand, but just people trying to stay warm, as most of the US and the world actually saw. The Acropolis in Greece was covered in snow today. And of course, here in Vancouver, we had our own snowfall last week, Family Day weekend here, and I know my dogs quite enjoyed the snow fun out in the yard. So everyone trying to stay warm, which is using fossil fuels. There we go. Lower income households dim U.S. consumer sentiment. So, I mean, basically this goes to consumer sentiment. I talked about the small business sentiment we're waiting for, but the consumer sentiment is has fallen a bit. There's a bit more pessimism out there growing among the households that have annual incomes below 75,000. Not a surprise. This is actually something we've talked about, the kind of disjointed, especially in the US, kind of the disjointed, I don't necessarily call it classes, but there's a big part of the U.S. economy which is that below 75,000 annual income, mostly hourly workers. They don't have the health plans, they don't have the sick leave protections, and all these different areas that those above have. And those are the ones that are really suffering through this pandemic. Those are the jobs that have been lost. They're the ones that haven't come back as much. And as I mentioned, if they do get ill or if they are exposed, a lot of them don't have healthcare protections. So we're starting to now see that divergence between those two as sentiment is starting to wane there. Also, with the new stimulus package, obviously didn't come as quick, maybe not exactly what they were hoping for in the U.S. And some limitations that they're putting on there, especially for households below 75,000 in income. So we're going to keep a track on that. The health of the U.S. economy needs this part of the economy working, and that's going to be the big job ahead for the U.S. is to re-stimulate that part of the economy, because the higher income earners have pretty much bounced back through this pandemic, but it's that bottom part, that lower part, which is actually much larger. There's a lot more people that are living in that area or that income level than those above. The U.S. says it's back to the table to help global economic recovery. So this is a change of administration, obviously, with Biden's presidency, focusing on international relationships and trying to get that restarted and move it on again. The Fed is eyeing some trouble in commercial real estate in the U.S. They do these corporate debt or stress tests on banks regularly. We do them up here in Canada. And what they're looking at is some potential problems around commercial real estate, over-leveraged commercial real estate. So that's a lot of debt, and of course the income. So a lot of rents not being paid, can rack up that debt further, or the debt's not being covered. So they have a lot of concern around that. Again, that would be a big hit to the U.S. economy if that stress test were to fail. So we'll keep closer eyes on those as we move through that as well. Investors eyeing shares of hotels and cruise lines as the idea of U.S. vacationing is picking up. So I mean, this goes back to last March, obviously, when the pandemic hit or the closures hit. Everything was hit hard, but most of the market has bounced back. Cruise lines and hotels and even airlines have bounced back off their bottom, obviously not back to the highs or the pre-pandemic levels. And we're starting to see some shareholders move in early stages. I do think there's probably some opportunity for hotels there. It will start to come back. People will probably start to travel more locally. The idea of conferences, businesses start to spend money again. Cruise lines, that one, I think, I'd love to hear from you guys on this. Obviously, this is really going to come to consumer confidence. Most people I talk to are not really super excited about jumping onto a cruise again after what happened. I often kind of mention, like, can you imagine being the person who convinced your partner to save a bit of money and take an interior cabin on the cruises and been stuck for 2 weeks or longer in an interior cabin, not being able to leave your room, versus spending the money for a balcony. But obviously, there are some concerns. They did try to do some test cruises in late 2020 overseas. There was one out of Japan, I believe, and another one in Europe, where they were running at half capacity with all the extra measures for cleaning and distancing and mask wearing and all these things, and both of them had an outbreak. So when it comes to the cruise lines, I'm still a bit concerned about investing. Same goes for airlines. I still think there's a lot of repair to be done there. It'll be really interesting to see how much business travel comes back, I mean, obviously it's going to come back some, but through the pandemic, with people shifting to the video conferencing, the Zoom type and Google Meet type of softwares or technology, is it going to come back to those same levels? That's going to be tough to see anyway, or take some time. And then again, how much are people going to have the confidence to jump on a plane and go travel somewhere? So those are areas that the market is starting to focus on. I personally, if you want to play that area, would focus more on the hotels. I think they have a broader recovery opportunity than the cruise lines, certainly, and even the airlines concern me a bit still. So BC here, the vaccine rollout, as of course we've talked about for the last few weeks, it's been off to a rocky start. We have more vaccines coming in this month, and they're hoping to kind of get through phase 1 by the beginning of March here, and that's going to be all the senior homes, the medical professionals, those working with people in care homes, or those the staff that take care of seniors or higher risk people, and those over age 80, and Indigenous seniors over 65. After that, the focus is going to be on the general population, so moving that age group down. Of course, that's really going to start to push in April through the fall of 2021. Hopefully that's where we see things really pick up. We've seen other countries take advantage of max vaccine sites. Hopefully we would seem to have worked. So maybe BC is going to move to something along that. And we are expecting a bunch more, or 16,000 more Moderna and 6,500 more Pfizer doses. And also that Johnson & Johnson one's in there for approval. And if that one gets approved, the really interesting one about the Johnson & Johnson, of course, it's one shot as opposed to the 2-shot that you get from Pfizer and Moderna, which would speed things up. The effectiveness of that one from the reports I read is lower, but it might be one that they focus on the younger, lower risk groups where they would still get the vaccine, they would still be protected, not to the same levels, but enough that we can bring the numbers down and hopefully reopen some of the parts of the economy. I do have a question in Hub about Bitcoin. Yes, I am going to talk about Bitcoin. It's hard not to talk about it these days, but I'll get to it in just a second. Coming up in the US, big box retailer Walmart is going to be reporting. And of course, we're expecting some good numbers. Pretty much all the retailers, the big box retailers, have seen pretty good numbers. They've managed to stay open. That's a big controversy, not just here in Canada, but also parts of the US, where the big boxes stayed open, such as your Walmart and Costco's, and you go in there and there's no social distancing. It's packed to the rim, door to door. Meanwhile, your little local owned and run shops where they're limited 3 people at a time, and everyone's wearing masks, and they're taking all the extra protocols. They've been asked to close, especially like areas in Ontario. So, I mean, obviously, hopefully we're coming out of this and we can see those reopen again. But we expect the numbers at Walmart to be strong. Probably going to see some higher costs as they have incurred, more cleaning, the plexi, the mask, extra staff, and the likes. That's pretty much been a theme we've seen through the retail market. The Federal Open Market Committee is going to be meeting on Wednesday, and they're going to release their minutes from their January 2021 policy meeting. So this is, of course, we have the new government in the US. The Fed Reserve came out and kept interest rates at near zero. We don't expect a big change from the Open Market Committee, but it'll be interesting to see if there's any change in tone, as to how they're going to approach things, if there's any new ideas, and then they'll be working really closely with the Fed as well. The Commerce Department on Wednesday is expected to show retail sales. Looks like we'll see a slight rise for January after we saw a fall in December, but just a slight uptick. we are seeing some production numbers rise in January, which means obviously there was a little bit extra spend in there. But that being said, we're still seeing definitely a plateau in those fronts. On top news in the US as well, Google's struck a $76 million deal with a French publisher, which is kind of leaving a lot of outlets infuriated. This was a French news publisher who had a year-long spat over copyright with Google and the parent company Alphabet. Google decided to pay to make that go away, but then all the other publishers are kind of we've been treated unfairly. They got paid, we didn't. So I expect that will continue some back and forth. Amazon is suing the New York Attorney General to preempt the COVID-19 lawsuit. So this goes way back to the beginning. If you followed it, I don't think we covered it in these back in March and April, but an employee of Amazon named Christian Smalls, an activist working towards fair treatment of the employees at Amazon, was working on potentially unionizing some of the warehouses, and they fired him. They had their whole, their side of the story. They had reasons. His side of the story is that it was just to quiet him. So there was this case pending in New York that they were going to go after Amazon for that firing. Now Amazon's suing them to preempt it, present their facts before it kind of gets out to the public. So we'll see where that goes. The White House is saying no intentions to require COVID-19 tests for the domestic flights. So if you've been following this, for international flights, Canada's done the same, UK's done the same. Most countries are requiring a PCR test within 3 days of your flight in order to fly in or out of the countries. So this is an added step or added burden if you're going to travel internationally, especially because there's a lot of confusion over the types of tests. It is that PCR test that you would do here in Canada. It's not the antibodies test. It's not the fast test. And if you're out of the country, where do you get these? And can they turn them around fast enough? And even if you want to leave the country, because I know we've got some friends whose kids go to school in the UK, they've got to get it for their flight. Life Labs here in BC are doing the test, but they're not guaranteeing the 24-hour turnaround. Of course, with the time difference, they have to have it within 3 days by the time they land, and you lose almost a day going out to the UK. So this has been a challenge. So the White House, some of the airlines and some of the states, there was tossing around the idea. Also here in Canada, the idea we tossed around a bit of requiring the same test for domestic flights. So the White House is saying they're not going to do that. Well, that's good news if you need to travel domestically, because as I mentioned, all those challenges of trying to get a test, get the results, make sure you have the right test and get on the plane, within the time limit that you have is difficult. So that's good news for anyone who has to fly domestically, especially if it's for work or see family, which is what we're seeing a lot of these days. UK Supreme Court is to rule on workers' rights in case in Uber on February 19th. So this is the same thing we saw down in California. So there was this push to introduce laws that would protect contract workers, or they're currently, and Uber is being kind of held up as the poster child or the case, sample case for this. But this is kind of just the contract work environment where people are signing up and doing work, on contract piece work, just like an Uber driver. There's Lyft drivers. There's other industries as well, whether it be the food deliveries or others. So the problem there is those workers, they don't get sick leave. They don't get any employment benefits. They don't qualify for EI. They don't qualify for anything you would as a normal employee. So in California, we saw this law being pushed to classify them as employees, and it was back and forth. And Uber and Lyft were basically going to shut down in California if it happened, because they said they couldn't afford to do that. That's still going back and forth, and now it's over in the UK. So that's kind of where that case stands. We're expecting to see a ruling from the UK court. It's really going to be interesting to see how these cases unfold, because this whole economy or contract economy has been growing dramatically for the last 5 years, certainly probably longer, to a significant size. And if all of a sudden we had to shift to a much different model, for good or bad, I'm not expressing an opinion there, but it would cause a big disruption in those models and how they would contend with that. I'll just to add to that as well, some of the employees don't want that, or some of the contract workers don't want it, and that's what's been going on in California. Is there's actually been a pushback by some of the employees. Obviously, some want it, some don't. So that's going to be the back and forth we're going to watch. CMHC, Canadian Mortgage and Housing Corporation, is expected to report its housing starts for January after showing a slight decline in December. It'll be interesting to see the numbers because, of course, the housing market or the real estate market in Canada has set another new high for January, but the volumes are very, very low. Prices are staying high, money to borrow is super cheap, but the volumes are very, very low. So it'll be interesting to see how the new starts are. I've talked to a lot of developers across Canada, and they seem to be going full speed. So we'll have to see how those numbers are. Now, Air Canada's announced that they're having some encouraging talks with the government on aid talks after they reported a $4.6 billion loss in 2020 after a profit of $1.48 billion in 2019. So this is the back and forth we've seen here in Canada about subsidies for the airline industries from the governments. There's been a lot of pushback on the refunds of passengers' flights. So this goes all the way back to March 2020, and everything shut down. Everyone had to cancel all their trips for 2020. And the airlines, not just Air Canada, but a lot of the airlines, didn't refund right away. Some people I know are still waiting for refunds. And sometimes it wasn't a refund, it was a credit that would potentially expire. Now they've extended some of those to not expire, but they're still not a refund, they're just credits. And the government has been pushing to say no, if they want to have any sort of government aid, they have to give those refunds. And there's been this push back and forth between the airlines and the government. So we'll see how that plays out as well. Enbridge, excuse me, the pipeline raises his Line 3 replacement cost estimate by about $1 billion. So this is Enbridge's pipeline, line number 3, which they've been working on a replacement project to bring it up to date. And they've run into regulatory challenges, permit delays, of course, all the different things that are going on with the pipelines. And of course, winter, excuse me, winter construction and COVID-19 protocols. Sorry, that tickled. So with all those things, they added $1 billion to the cost of that overrun. Sounds like my renovation. Everything costs way more than you expect. Canadian regulators are a clear launch for the world's first Bitcoin ETF. So here we're going to talk about Bitcoin. So can't avoid it. So if you want to buy Bitcoin, if you want to buy it in the past, any cryptocurrency for that matter, you had to go to one of the crypto exchange apps or sites and buy there. Excuse me. The big challenge there is which one do you use? There have been some frauds. There have been some coins gone missing, or people locked out of where they, the wallets that they hold them on. So we've just cleared an ETF, an exchange traded fund, which is a Bitcoin fund that you can buy on the stock exchange. So that's new out of the gate. And that sparked an explosion in more trading interest. So this, if you haven't yet, if you have an interest in Bitcoin, I did do a whole video on it. Just reach out to us or go to mygoodmoney.com. You can find the links on our YouTube channel, or just reach out to us. We'll send it to you. Which talks about the, bit of the challenge and what's driving the price right now. The biggest challenge is just supply and demand. So we're having extra, more and more interest course, we talked about last week where Tesla bought 1.5 billion of Bitcoin, where they want to, start, or sorry, they've kind of alluded to that they want to allow people to buy with Bitcoin. And we've seen other companies like Apple start talking about the possibility. We mentioned before, Facebook on their marketplace is talking about coming out with their own cryptocurrency called Libra, where you'd be able to buy things. So more and more cryptocurrency is moving into the forefront. And Bitcoin's kind of the poster child for all this, being one of the larger ones. Now, there is a very limited supply of Bitcoin out there. And of course, people buying this ETF means more and more Bitcoin has to be bought on the open market. So you have this big demand and limited supply that's driving up the price. The big challenge that we're eventually going to come to here, as more and more people talk about using cryptocurrencies, and even the Canadian government came out last week talking about, cryptocurrency or Bitcoins, it's going to offer challenges because it's unregulated, which is the appeal of it. But from a governmental standpoint, not being able to tax it, have sales tax, capital gains, money laundering, tracking, all these different things that, our financial system is based on, for governments to allow cryptocurrency to become mainstream will be very difficult. I'm not saying it's not possible. It's just very, very difficult without some sort of regulations or some sort of monitoring. But then you start to defeat the purpose of crypto. And then also on top of that, as I mentioned, you've got Apple talking about their own crypto, Bitcoin obviously very popular out there. I'm not going to get into Dogecoin if you follow that story. I mentioned Facebook's Libra. Other countries, central banks are talking about having their own cryptocurrencies. So at what point now have you diluted it down to, having to exchange between all these differents to buy something? It's not like you have one currency you can buy from in that country. So a lot of challenges around it. It did break through 50,000 US today, down below that again, just around 49 and change last I looked. Obviously, the ETF has been driving it, or ETFs and other investments like that have been driving up the demand. It's a difficult one to get around to have in a portfolio. At least with the ETF now, you have a bit more liquidity and access to it. But the underlying challenges remain, and we still see massive swings in the pricing of this. As much as it moves up very quickly, it moves down very quickly as well. So that's kind of the update on Bitcoin. Of course, we're continuing to follow it, and anything we see more news coming out of the cryptos, we'll stay on top of that as well. Flight Simulator CAE's profits was half due to the pandemic weighs on their demand. So CAE, great company. We've had it in the portfolios in the past. We've done really well with it recently. We moved out of it a couple of weeks ago after having a great run with it. The price is holding in there, but they did see a drop in the third quarter profits on the simulator demand. So this is the flight training, obviously with less flights happening. The simulator is required less for training pilots. We might see though that pick up a little bit as the 737 MAX 8 gets back into the air. Of course, the pilots will have to refresh themselves on that, and of course, all the new protocols around the safety of that. So we'll see how CAE performs over the next little bit here. On the U.S. dollar front, again, a little bit of slipping as global recovery hopes drives investors away. Same trend we've been seeing for the last year, probably going to continue there. We did see a big move on the pound sterling, as the vaccine rollout has been going well, and also with the Brexit moving along, or at least slowly moving along as they work their way through those issues on that front. The Fed continues to signal their monetary policy will remain accommodative to keep inflation at bay without raising interest rates for as long as possible. So we'll keep a close eye on that to see if they can keep inflation slow enough that they don't have to raise interest rates. Bitcoin, as I mentioned, broke through 50,000 US. Last we saw the update was 49,000, just over 49,000. On the commodity front, as I mentioned, oil saw a good rise, over $60 a barrel, mostly on the demands for the cold weather front. And we've seen a sweep across the world, as you say, the US, but we've seen it right across the world, and that doesn't look like it's going to slow down over the next couple of weeks. So let's jump into taxation. Now, there's a lot to talk about taxation. I'm going to cover some high-level stuff, especially on the corporate fronts. There's a lot of changes on corporate, some minor, or I should say clarifications, especially if the corporation took advantage of some of the government assistance over this last year. If you want more details on that, I have like a 70-page package I can send out, but I'm going to talk pretty high level on a few different things. So just some personal tax updates. So the exemptions here in BC, personal income exemption for 2020 is just shy of 11,000, 10,978, I think it is. So that that moves up with inflation. Also, a big update, if you did work from home over this in 2020, traditionally you would need a special form, a T2200 from your employer, or if you were self-employed, you would have access to deducted work at home costs, but employees did not. There was a change last year. If you worked for 4 weeks or longer from home in 2020, then you have a couple of options. One, there's a flat up maximum $400, $2 for every day you work from home that you can deduct against your income. And then if there's 2 of you working from home, you can both deduct that. So that's just a flat 400. No complications. You don't have to have detailed receipts or anything like that. If you worked longer than 4 weeks at home and you had some higher costs over the 400, you can ask your employer to provide you with it's a modified T2200 specifically for working from home. So the 2200 is usually for commissioned salespeople, where you can deduct business expenses included working from home. This is a modified, shorter version that would allow you to deduct costs at home. On the $400 max simple one, you don't have to calculate square foot. It's just that $2 per day. If you're going to do the detailed or the T2200, well, now you can deduct you have to measure your office space. So how much space did you use for your work, and whatever percentage of the total square footage of your place. That's what you can deduct from things like your home internet, heat, certain office supplies, rent. If you're renting, you can do it off the rent. If you're in a home that you have a mortgage on, you cannot, on the modified T2200, you cannot deduct interest on the mortgage. You can if you're self-employed, but not if you're an employee on this modified T2200. If you're self-employed with the full 2200, you can take the interest. So there's a lot, basically all those different percentage, that percentage of space you can deduct, homeowners insurance, if you own the home, not if you're renting. Basically, taxes, pretty much anything you're spending on the home for that percentage of space that you're using, right? So that office space that you'll have to detail. So keep that in mind. So that's brand new for 2020 tax year. You can take advantage of that. They also introduced in 2020 a training tax credit. So this is up to $250 a year or $5,000 lifetime. You can apply for education, right? So if you're, this is designed for mature education. So if you had to take courses, go back to school, whatever it might be, you can definitely take advantage of those as well for 2020. Some important deadlines, of course, we have our normal April 30th tax filing deadline. Our speed deadline is March 1st, so if you want to do any deductions, you have till March 1st to do that. T-slips, if you haven't received them, most people have them out by the end of February, but it is March 31st is the latest they can be sent out. So so just keep that in mind. If you're self-employed or your spouse are self-employed, then the deadline for filing is June 30th. Now, talk a little bit about the CERB or the government relief stuff. Obviously, a lot of controversy around this. If you did claim CERB or any of the government relief packages, again, I'm going to park the corporate stuff on the side here because it gets a bit more complicated. But if you claimed any of that, or you were on EI last year, or maternity leave, and you have extra tax due. So EI, maternity leave, the government did withhold some taxes, probably not enough depending on your other income for that year. And if you were on CERB, they did not withhold any taxes. And in fact, a bunch of people kind of got it and, were not, have now been determined to be ineligible. So there's some back and forth going on there. But basically what I want to touch on is if you do owe any taxes for any of those assistance programs, that tax is not due until June 2022, interest-free. So there's no penalty and no interest if you don't pay it right away. If you have normal taxes due, April 30th, those are due. But if you have any taxes due to those programs, they're not due right away. If you did claim some of the CERBs and you've been deemed uneligible, they are looking at some self-employed people because there was some miscommunication at the beginning of that they're not going to demand it to be repaid, but it's still in kind of a back and forth with CRA right now over that. So we'll have to see how that plays out. If you're a corporation, the only thing I'll touch on the corporation, if you received any of the benefits from the corporate relief packages, whether it be rent subsidy, employee subsidies, or the loans, there's part of the loans were forgivable, part of them were not. Those are taxable in the time period you qualified for, not necessarily when you received it. So for example, you could have applied in January 2021 for some of those backdated to a period in 2020. Even though you might receive the money in 2021, it is taxable for the period in which you claimed it. So keep that in mind because you got to go back and make sure you do that. Also for 2020, if you're an employee and you receive certain taxable benefits from your corporation, let's say your company pays for your parking, which normally be a taxable benefit, or maybe they gave you a car subsidy or commuting subsidies, which are normally taxable benefits. Those are going to be waived. Some of them, or a lot of them, will be waived for 2020. So if you are getting any taxable benefits, benefits that are normally taxed as a taxable benefit, keep in mind that those, a lot of those are waived. So make sure you double check on the ones you have to see if you qualify for those. Also new, of course, this rolled out pre-pandemic. BC introduced a new tax bracket for those earning income over $220,000 a year, which bumps up the tax bracket to the top tax bracket to 53.4, I think it is. So that comes into effect, fully in effect for 2020. That we'll have to pay as well. Oh, the other one was the benefit if you had caregiver subsidies. So if you were deemed a caregiver for someone else and you were getting any subsidies, keep in mind if you have to pay tax on any of that, you have until 2022, June 2022, at no interest to pay for that. already covered the changes at home office deductions. If you are, again, if you are self-employed or incorporated, you've always been able to do the deductions from home, and you're also allowed to, as an employee, though you're not, even if you have a full 2,200, you're not able to capital cost depreciate that percentage of your property. So that's an extra tax deduction against the value of the home overall. So you have to be self-employed to be able to take advantage of that. So obviously, these are just a highlight of a bunch of changes to look at for 2020 taxation. If you have any specific questions about your situation, come visit us at mikeonmoney.com or give us a call. Happy to answer those questions. I just did a video over the weekend on flow-through shares and how to use them for tax havens. So that should be out any day now. Also, both podcasts and video. I was kind of remembering, I actually did a flow or a tax. My last in-person speaking workshop that we did was March 5th, 2020. And that was the last time I saw you all in public. Was on tax. We talked about flow-throughs. We talked about gold being a good investment, and it turned into a great investment for 2020 on top of the tax subsidies that they've got that. Of course, if you follow me, I do like gold as an inflation hedge. So it'll be another interesting one if you are looking for some additional tax deductions. The flow-throughs are an interesting strategy. Be very cautious with them. This is definitely one you want to talk to an advisor or do some in-depth due diligence on, because they do carry different risks. There's hold-in periods. There's changing from deduction from your taxable income to turn it into a capital gain. All kinds of things. So it's not something you just want to quickly do and say, like an RSP. You definitely want to make sure you have a tax plan before you jumped on those. But I did a video on that, so go check that out in the coming days. And with that, I'll say thank you. If any of you have any questions or suggestions of topics that you'd like us to cover here, we always really appreciate those. As I mentioned, the Bitcoin one, if you're interested, you can go see that or listen to that podcast. We'll probably be doing an update in the coming weeks on Bitcoin, just as more information is coming out. Really looking to see what the government's commentaries are and position are when it comes to the cryptocurrencies. So with that, I'll let you go enjoy your day, and hopefully we'll see you again here next week. Thank you.